Get your calendars out. February 17th, February 18th, live trading, San Diego. We got the Lowe's Coronado. I mean, what else would you want? This event is limited to 50 people. Look at your calendar, clear it, make sure you show up. If you want to be a rebel, this is the place to be. You got to sign up for it now. Giddy up, baby.
Welcome back to 3 at 3. 3 at 3 every business day. We, meaning me, and the group at Market Rebellion, bring you unusual option activity. So if you're wondering, where was their unusual activity and does this really work following these big blocks of options to determine where we want to invest? Well, I've got several examples for you today, both of calls and puts that have triggered on our algorithms. So let's get started with what is it, the 4th today? I guess yep, 4th. Wow, time flies. The 4th of January, 2023. I will be on, by the way, with Charles Payne on Friday. Friday, that would be January 6th, a date that will live in infamy, apparently. But I will be on with my friend, Charles Payne, talking about options and what the market is saying through the purchase of either calls or puts. And I will be sharing that with Charles and you, if you choose to tune in, on the Fox Business Channel at 2 p.m. Eastern Time this Friday. I hope we see you then. All right, here's one. K-Web, just from the last couple days, right? In fact, this one less than 30 days old. They bought 30,000 of the Feb 30 calls. That gives people the right to buy, but not the obligation, but the right to buy at 30. Well, as you can see, at that time, it was just over 30, trading $30.31. K-Web has appreciated, as has our position, and those calls are now $4.40 in the money. It's not magic. How do you figure that? Well, the right to buy it at 30 is worth $4.40 when the stock's trading $34.40, and it has been even higher today. So if you're somebody in these calls, it's probably a good idea to take a lot of that money off the table. I cannot give you financial advice. I can tell you what I am doing. So what did I do? I took that money off the table, and then I rolled up to a higher strike. Why did I do that? Because they have not liquidated these calls yet. By liquidated, I mean when they purchased them on December 6th, we followed them in. They have still held on to this position. So they think there's more gas in the tank. I want to ride along with them, but I pull money off the table and then roll up to a higher strike so I have less risk, but still can participate to the upside. That's what I mean when I say rolling on up with them. Here is one in Las Vegas Sands. Las Vegas Sands, they bought 6,000 of the June 55 calls just yesterday. And you might recall, I said, well, these are in the middle. We had one that was a year out into the future. We had one that was a weekly option. Well, these were 6 months out, so in the middle. But they were buying these with the index, or the stock trading at $49.51. It went up by better than $2 from that level, as you can see on the screen. So we have already, boom, made some nice coin on this trade. Again, these are June calls. So what will I do there? I will roll up as these go deeper and deeper in the money. Now, I didn't buy the June 55. Most of you who tune into our discussions about this on a daily basis know that I like buying the at the money call. So even though it says here June double nickel 55 calls, I didn't buy those. I bought the June 50s, which I said yesterday, and you can go back and check it on our YouTube channel. Again, go to YouTube, type in Market Rebellion, click subscribe in the upper right-hand corner, and that's completely free. You can also click notifications. but you'd be able to go back and see every broadcast that we've done for these calls and unusual activity. But as I said yesterday, I bought the at the money calls. I bought the 50s, which are now $1.71, bang, in the money, because I bought the right to buy it at 50 is worth $1.71 today, plus 6 months worth of time premium, plus various other pricing that goes into any option contract, whether it's for 6 months or 6 days. So will probably, if this keeps going, roll up, unless they liquidate, I will roll up to a higher strike and still participate to the upside like in the previous example. Or this one, Webio, stock was $11.94. They bought 14,000 July 15 calls. Well, guess what? Those calls are now deep, deep in the money, and I didn't own those. I've already rolled this one up twice because I initially bought the at the monies and then I rolled up, and now I am rolling up again because I don't want to hold a call that's $4.92 in the money, which I had, which were those January 15s. And that was my roll from the lower strike to that January 15. Now I've rolled up to a higher strike, and I may liquidate pretty soon. As you can see, the stock rolled all the way up to $20.33 today. Bang! That's what I'm talking about, folks. Then we've got this one from yesterday. Note the date, 1/3/2023. So that would be yesterday. Bullish call buying the stock was $9.37 at the time. They were buying big upside calls. The weekly calls, this was that very short-term one that I talked about yesterday, 12,000, that's 1.2 million share equivalent. Jan 950 calls. So the at the money call, I bought those. They have now moved up. As you can see, the stock up to 1028 today, which means the right to buy it at 950 would be worth 78 cents. The right to buy it at 950. What did we pay for them? 10 cents. So we have sevenfold on the money we put up yesterday. Bang! And because it's so short term, I liquidated 90% of this position already. If you're getting the idea that maybe you should be following along with unusual activity, by all means, I think you are shrewd to indeed support the work that my brother Pete and I have done. I have been doing this for 41 years, folks, trading since 1981. Pete, since 1992. So I think we know a thing or two about trading. We don't just talk about stocks like some of the talking heads. Oh, look at the size of his briefcase. Oh, look at the weather. Oh, it's a full moon today. What must that mean for the markets? We're more into the fundamental as well as other factors that go into the stocks, including technical analysis, which I support, but I'm not a technician, but I do pay attention to the technicals. And I definitely pay attention to being a disciplined investor, which you need to do if you're going to be in this game for any period of time. And we had one more, GDX, yesterday. Might have another one today. GDX, that's the gold miners index. They were buying with the stock at 29.46. They bought 31,000. That's 3.1 million share equivalent, but they bought them way out in next year. So I bought long-term as well, but I want to be very supportive of the short-term trades, which I am so familiar with and more comfortable with. So I'm in the shorter duration calls as well as the long-term calls here. I just didn't load up on those long-term calls. But as you see, it's up better than $1.40 today. So bang, another nice winner for us to roll into 2023. Bang, 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 bang. 5 of them, folks. Boom. All right. Let's talk about Pete and Jon celebrating. If you'd like to follow us, you can follow us. My handle is just my name, Jon Najarian. Pete's is his name, at Pete Najarian. Encourage you to follow and decide whether or not trading options could be a great way for you to participate in the markets with less risk define your risk when you enter with options. All right. And to learn more about that, join us for a free webinar tomorrow, because Mastering Momentum Like a Floor Trader is our conference tomorrow. It is free to attend, 4 o'clock Eastern, which is, of course, at the market close, January 4th. That is today. I'm sorry, I said tomorrow. It is today. Today, it's Wednesday. You know, I always get screwed up when we have these Monday holidays. I got screwed up last week on the 26th, but this week I caught myself just as we were about to say, come in tomorrow. No, sign up today. Join us today, January 4th, for the free webinar. And if you do, we will also send you a copy of the webinar after we finish it. So if you can attend live, we would love you to be there with us January 4th today, somewhat 50 minutes from right now. But if you can't attend for whatever reason live, we will send you a copy regardless. Just go to marketrebellion.com to register. That's marketrebellion.com, and you can register and join us. Remember, you can't beat the averages by doing what the average person is doing. You've got to find a niche, something that the average person isn't doing. We think unusual option activity, so in other words, exactly what I've been showing you on 3 at 3 is what the average person is not paying attention to, is not doing. But as the examples I've shown you today so far should be saying to you, this is something you should pay attention to. All right, Lithium America. Guess what they make? Well, they don't really make lithium, but they refine it and they get it out there. And this company is near and dear to everybody who wants to invest in EVs. The market at the time was trading $18.50. They're buying $4 above the market. February 2250 calls. What should you do? I can't tell you. I can't tell you you should buy those. I can tell you that I will be buying the at the money calls and then selling above the market as it rallies, because that's what I do. If that's appropriate for you, then you should follow along. But I can't make that call for you. You have to decide if you know enough about options to follow along with me. What I can tell you is 14,000 options is 1.4 million share equivalent. So you need to pay attention to that, because that's a big trade. I can also tell you that I don't want to wait for $4 worth of pop to get richly rewarded. I like buying at the money calls right where it is now, and then layering calls, selling calls against it, into it as it rallies. Bang. San Diego coming your way. That is February, I think, 17th and 18th out in San Diego, California, just after the Super Bowl. Super Bowl this year's in Phoenix. But if you're there and you'd like to just hop over for a 45-minute flight, come join us in San Diego. San Diego, it's limited. There's a small number of you that will be able to join. This is not a 1,000-person event. So if you'd like to join us for 2 days of live trading in San Diego, go to marketrebellion.com/SD. That's marketrebellion.com/SD. You can see about those 2 days of live trading. All of our great coaches and mentors will be there. You will come away with a much better understanding of the markets if you can join us. Go to marketrebellion.com/SD for more information. All right, GDX. I told you we had it yesterday. Have it again today. $1.40 higher than where it was yesterday. And they're buying the February 35 calls. Again, I'm buying at the money, not out of the money calls. This is the Gold Miners ETF. February 35 calls, nearly 7,000, which means nearly 700,000 share equivalent, because every option is for 100 shares. So they bought them for $48 a piece, again, because every option's for 100 shares. So 48 cents each times 100 is $48. So if you wanted to simulate a 1,000 share position, it would only cost you $480 to do that. So if you'd like to join, decide what strike price you want to buy, and then you can define your risk on entry by buying options instead of stock. The Rebel's Edge, this is what Pete and I do Monday, Tuesday, Wednesday, and Thursday. We do it and we love it and we love your input. Thank you. Some 39,000 of you have subscribed already to make sure that you do not miss an episode. How do you do that? Well, go to YouTube. In the search bar on YouTube, type Market Rebellion. If you do that, you will get all of my 3 at 3 broadcasts for free. You will get the Rebel's Edge live for free and archived for free. All you got to do is go to our YouTube channel and on the search bar, type in Market Rebellion, click subscribe, click notifications. Pete comes down your chimney, hands you the content. It's amazing. He's just like Santa. He can travel all the way around the world and deliver content. And just like Santa, he comes down the chimney. That's why he's been growing that white beard, by the way. All right. KSS, Coles, KSS, bearish put spread. Did some of these retailers not do quite as well into the holiday and through the holiday? Well, time will tell. We're only on the second trading day of 2023, but somebody decided that they want the next week, January 13th, expiring 25 puts, $1 out of the money, $1 under where the stock is trading right now. So they bought 3,000 of those. That's 300,000 share equivalent. If you want to participate in that, it would cost you about 65 cents, which means $65 because every option is for, you got it, 100 shares. So a $650 investment means you have defined your risk, you're betting on the downside, and if the stock falls, you could turn that $650 investment into $1,000, $1,200, $1,500, wherever Kohl's falls to. We all know stocks take the stairs up and the elevator down. So if they have a big miss here, this one could be a big winner for you. And if it isn't, I would cut my loss at half of what I paid. So if I pay 65 cents, then I'm going to cut my loss if we fall below 35 cents, because that's the way I roll. Thank you for joining me today, folks. I encourage you to check out marketrebellion.com/get started for more. You can also join us today for that trading momentum like a floor trader. Marketrebellion.com gets you to both. Marketrebellion.com, you can register for the webinar today and get the email. Marketrebellion.com/get started gets you a little bit of everything. You can see all of the offerings that we've got with no obligation. Bang. Glad you could join me today. I hope you have a great one. I will see you tomorrow with my brother Pete on the final Rebel's Edge of this first trading week of 2023. See you then.